Hey guys, Adrian Manz from TraderInsight.com here. I had a couple questions come in about what we did in the first hour trading pit this morning. That's natural because most of you guys are brand new. You're just there trying it out for the first time. I just want to go through exactly what it was that we were looking at and focus on these couple of questions that you had, which are really good ones, by the way, because you're already talking about the methodology that we're using, and you're already focused on how we get in, how we get out, and why we make the decisions that we do, and that's exactly what you should be focused on. So let's drill down. Let's have a look at the two trades from the first hour pit that I focused on. Other people were focused on some other ones, and then I'll see if I can answer some questions for you regarding how to set these up. The first one on the list here was eBay, and if you're looking at a chart of eBay, then what you would see is that normally we would have an entry point on this short sale 2SD fade of a morning gap right there about $38.85, and we would have a target just about 50 cents away, 49 cents away, $38.36. The question that you had for me was, well, how the heck did you know that this thing was going all the way down here and was going to close the gap? And the answer is I did not know that it was going down there to close the gap. What I did know was that at the time on the New York Stock Exchange open book, we kept seeing this kind of liquidity popping up on the bid side of the book way below the market. And as I've said before, when there's a lot of liquidity below the market, it's a very good indication that price is going to move in that direction, because that's where the specialist, that's where the $2 broker, that's where everybody's getting rewarded for making that trade. They're getting paid for order flow. It's very natural to assume that price is going to make that move down there. So when I saw those blocks going off, I didn't actually think it was going to make it all the way down to $35.92. What I thought was going to happen was, as the blocks above that were getting filled, eventually we were going to reach an equilibrium point, and we were probably going to get down into yesterday's range where there was liquidity and they could get the orders off and get all of those blocks filled. That's exactly what wound up happening on eBay. As you can see, nice big move down into the range from yesterday, over $1 per share traded on eBay with no problem whatsoever. And this one really wound up being a great trade. The next one that you had questions about, ATSG, and this is for a couple people who are new to setting up these orders. They're not as intuitive sometimes as the trading plan, and that's because the trading plan, of course, everything's laid out for you and you know exactly where you're going to get and exactly where you're going to get out. So what you want to do in this case is, from yesterday's trade data, you'd be looking at this low, $23.12. That's because we've identified this as a short sale for today on the XRV premium trading plan. Then you're just going back through and figuring out where are the likely reversal points going to be, the pivots on this thing, if it trades out of our range. I had a stop initially $23.67 on this, and of course my target is always going to be either $1 or the first floor trader pivot that I encounter, whichever comes first. So it's either going to be a buck or a pivot. Whichever one of those is the lesser amount is the one that we're going to go for on the target. $22.52 in this case was that green pivot, that S1 pivot. And how do you set that order up? In this case, let me show you. There's two ways you can do it. One is a bracket. So this is in Realtick. Any competent piece of software can do this. It can be very, very similar if you're setting it up in TradeStation. Going to be very similar if you're doing it in IB or just about any other platform out there. Going to hit the short sale button. In this case, I'm setting up a stop limit order, and I'm just saying if I hit $23.12, then go ahead and get me short down to, let's say, $22.95. So that's going to get me in at the low of yesterday. I'd probably go a penny or two below that. I'd probably go to 94 or 93. If I hit that low, travel through it, it's going to get me short down, all the way down, probably, you know, 10, 15, 17 cents is what I'm going to give it in terms of room if I'm going to have this trade unattended. If I'm sitting there, I'm not going to allow for any slippage at all. I'm just going to watch what it's doing. Then for my exits, they're going to be price, offsets. We're not using a straight offset, right? Offset would just be how many cents do you want to let it go, and in this case, we're going to use a price since we know where we want to get out. If we're going to get out for a loss, it's going to be at $23.67 initially, and if we're going to get out for a gain, it's going to be at $22.52. So this leg of the order here is calculating the worst possible scenario. If I get my worst fill that I'm allowing for, then how much am I going to allow this to go back and reverse before it gets me out? So initially, these numbers are going to be upside down in a lot of cases. Then as soon as that order is placed and as soon as the market opens, what we do in terms of handling these is we look at where is this thing trading. Now, based on where it opened, I very quickly this morning just pulled my stop down to $23.34. I don't want to do that before the open. I want to see where it opens, see what happens in relationship to yesterday's support and resistance. But you can see here, it's pretty clear we've got that low-level consolidation that happened before the close. And really, if it would have traveled back up and out of here after this soft open, we wouldn't have wanted to stick with the stock. So that's the rationale for moving that stop, right when we did in the first hour trading pit. And then, of course, when we got down to the profit objective, this one took us out. Now, the other thing that you could do is set up a conditional order, which is actually sort of a nicer way to set these trades up. And in that case, you would set up your short sale and you would say, this thing has to come into yesterday's range from above. So we want to make sure that before anything happens, price has to be greater than $23.12. If price is greater than $23.12, then we put our stop limit order in and we say 23.12, go down a penny, 23.11, and then down to 22, let's say 95 is where we would get filled. Now that condition is only going to trigger us in if price is coming from above and then gets down and tags us in. And then in terms of the other two legs, so let's say if we place this order and then we come back in and we set the other orders, now we're going to want to do a buy to cover order. And in this case, we're going to do an order trigger. We want to make sure that we got filled on ATSG. These are just going to be your attach OCO, OSO in TradeStation. In the case of Realtick, you just do them separately like this. We're going to say if ATSG filled us, got us in, then we're going to have a limit order to exit if we get down to $22.52. Okay. I just see here that I had if ATSG bid was greater than 23.12. We wanted that to be if the last price was greater than 23.12 on that last screen. But in any case, it's the same principle. If we get down to $23.52, take us out for a profit, and then we would just set up the exact same kind of an order leg for the stop loss. So I hope that all makes sense to you. If you're still having trouble setting up orders, the easiest order to set up is, of course, the bracket order. Problem with the bracket order, it's going to impound your margin even if the stock opens out of the range. If that happens, you just have to cancel that trade, cancel that bracket order, and it will eliminate the margin impound. Conditional orders are nice because you can have a bunch of trades lined up early in the morning, and then you can just go through and defer them as you see that they're not coming into range. So the other two XRVs this morning never triggered. We knew they weren't going to trigger because they were dollars away from our entry price. So it's a lot to wrap your head around initially, but once you do these things every day, it's actually pretty easy to put these orders in. If you still don't get it, give me a call and I'm happy to walk you through it. So I hope that answers your questions. If you have anything else, shoot me an email, adrian@TraderInsight.com. Hope you had a great trading day on Friday and an even better one on deck for Monday. It's the best trader education anywhere, only from TraderInsight.com.